Imagine this. Iran, locked in a dangerous high-stakes confrontation with the West and Israel, decides to weaponize the most critical energy choke point on the planet. The Strait of Hormuz, that narrow strip of water between Iran and Oman, is slammed shut. Traffic is restricted, ships are seized, mines are laid, and Tehran declares it will control every vessel passing through. Iranian leaders sit back, confident that their most powerful economic and strategic partner will have their back no matter what. China, the country that buys nearly 90% of Iran's oil exports, the nation that signed massive multi-billion-dollar infrastructure deals, and the rising superpower positioning itself as a counterweight to American dominance. Beijing will stand with us. They believed they need our oil too much to turn against us. Then, in a calculated move that sent shockwaves through Tehran and surprised analysts worldwide, China did the unthinkable. In May 2026, during high-level summits with the United States, Beijing publicly called for the Strait of Hormuz to be fully reopened for normal international navigation. Even more stunning, Chinese-flagged vessels and China-linked tankers began receiving special passage while the rest of the world's shipping remained heavily restricted. What was sold as a bilateral understanding between friends suddenly looked like a pragmatic betrayal of Iran's expectations. This is the story of power, energy, money, and the harsh realities of 21st century geopolitics. The Strait of Hormuz has long been the Achilles heel of the global economy. At its narrowest point, it measures just 21 miles across, yet under normal conditions it carries approximately 21 million barrels of oil every single day. That represents roughly 20% of all seaborne traded oil and about 20% of total global petroleum liquids consumption. The numbers are staggering. Saudi Arabia, Iraq, Kuwait, Qatar, and Iran itself all depend on this waterway to export their black gold to markets in Asia, Europe, and beyond. Any disruption here doesn't just affect prices, it sends ripples through entire economies, inflates transportation costs, and threatens energy security for billions of people. In the early months of 2026, following intensified military exchanges involving U.S. and Israeli strikes on Iranian nuclear and military facilities, Iran chose escalation. The Islamic Revolutionary Guard Corps Zerg Navy imposed what they called management protocols on the strait. In practice, this meant selective blockades, increased inspections, vessel seizures, reports of naval mines, and threats against any ship not complying with Iranian demands. Oil tankers began avoiding the route. Insurance premiums for vessels operating in the Persian Gulf exploded overnight. Shipping companies rerouted around Africa, adding thousands of miles and millions of dollars in extra costs. Global oil prices surged past $110 per barrel at one point, raising fears of a worldwide energy crisis not seen since the 1970s oil shocks. For Iran, this was more than retaliation. It was leverage. By disrupting the flow, Tehran aimed to make the international community feel the pain of any aggression against it. The strategy was high risk but calculated, force the world to pressure the United States and Israel for de-escalation while Iran's own oil exports, already limited by sanctions, continued flowing at discounted rates to its most important customer, China. Iranian officials believed they could sustain this pressure because Beijing had too much skin in the game to walk away. On paper, the Iran-China relationship looked rock solid. The two nations had formalized their comprehensive strategic partnership in 2021, a sweeping 25-year agreement reportedly worth up to $400 billion. China committed to investing heavily in Iranian ports, railways, oil fields, telecommunications, and even military-related technology. In return, Iran offered discounted oil, a strategic foothold in the Middle East, and alignment against what both governments describe as Western hegemony. For years, China has been Iran's economic lifeline. When Western sanctions tightened, Beijing stepped in, purchasing Iranian crude in Chinese yuan, bypassing the U.S. dollar-dominated financial system. At times, China accounted for 80–90% of Iran's total oil exports. Iranian leaders repeatedly spoke of an unbreakable bond, part of a broader axis of resistance that included Russia and other nations skeptical of American power. Tehran assumed this partnership would translate into political cover during the Hormuz crisis. They expected China to either openly support Iran's actions or, at minimum, remain quietly neutral while continuing to accept whatever oil could be delivered. After all, China had a long history of criticizing U.S. military interventions. In the Middle East and opposing unilateral sanctions, Iranian state media and officials projected confidence that Beijing would not abandon them in their hour of need. This belief was rooted in years of diplomatic rhetoric, joint military exercises, and economic interdependence. But as the crisis dragged on, the limits of that friendship would be brutally exposed. The turning point came in mid-May 2026 during President Donald Trump's high-profile visit to Beijing. Amid intense negotiations covering trade imbalances, technology restrictions, Taiwan tensions, and global hotspots, the topic of the Strait of Hormuz took center stage, according to statements from U.S. officials and readouts. From the meetings, Chinese President Xi Jinping made it clear that Beijing wanted the strait reopened for safe and normal international navigation. China publicly opposed the militarization of this vital waterway and rejected any long-term Iranian-imposed tolling or control system that disrupted free passage, U.S. Secretary of State Marco Rubio and other American diplomats highlighted this alignment as a rare but significant area of common ground between the world's two largest economies. Even more telling was what happened on the water. Iranian authorities began granting preferential access to Chinese vessels. Reports confirmed that dozens of Chinese-flagged tankers and ships with strong commercial ties to China successfully transited the strait under the very management protocols that blocked most other traffic. One massive Chinese supertanker alone carried nearly 2 million barrels of crude. Over a short period, more than 30 such vessels reportedly passed through. These movements were not random acts of goodwill but the result of direct diplomatic coordination between Beijing and Tehran, China's foreign ministry and its ambassador in Iran had quietly pushed for these exceptions, framing them as essential for bilateral energy cooperation. To the outside world, and especially to many in Iran, this looked like the unthinkable China prioritizing its own needs and global image over loyalty to its strategic partner. While Iran continued to restrict Western and other Asian shipping, it carved out a special lane for its biggest customer. This selective reopening sent a powerful signal. Beijing was not willing to let the Hormuz crisis threaten its economic stability or its broader diplomatic goals. Why did China make this move? The answer lies in cold, unsentimental pragmatism. China is the world's largest importer of crude oil, consuming over 14 million barrels per day. A prolonged shutdown or severe restriction in the Strait of Hormuz directly threatens Chinese refineries, manufacturing hubs, transportation networks, and overall GDP growth. Higher global oil prices feed into inflation, reduce export competitiveness, and risk social instability at home. Beijing has spent decades trying to diversify its energy sources precisely to avoid such vulnerabilities, building overland pipelines from Russia and Central Asia, expanding LNG imports from the United States and Qatar, investing in African and Latin American suppliers, and developing strategic petroleum reserves. During the Trump-Xi summit, progress was reportedly made on larger trade packages, including increased Chinese purchases of American oil and liquefied natural gas. Stabilizing energy markets served China's immediate interests. Furthermore, China maintains massive economic relationships with the Gulf Arab states Saudi Arabia, the UAE, and others, which are also major oil suppliers to Beijing. Fully endorsing Iran's disruptive strategy would have damaged these lucrative ties. Chinese diplomacy is famous for playing multiple sides simultaneously, maintaining defense and technology cooperation with Iran while deepening energy and investment links with Iran's regional rivals. Additionally, China values its reputation as a responsible stakeholder in global affairs. By calling for reopening the strait and facilitating its own shipping, Beijing could criticize Western military actions against Iran while positioning itself as a force for stability. This nuanced approach allows China to advance its long-term goal of reshaping international order without bearing the full costs of Iranian adventurism. Iran's public reaction was measured but carried undertones of disappointment. Officials described the Chinese passages as consistent with their strategic partnership and a pragmatic bilateral arrangement. Privately, however, there must have been significant frustration. Tehran had bet that controlling Hormuz would unify its partners and isolate its adversaries. Instead, its most important economic ally was adding pressure for de-escalation. The special treatment for Chinese ships highlighted a painful truth. The relationship is deeply asymmetric. Iran needs China far more than China needs Iran, while Beijing values Iran as a partner in resisting U.S. dominance. And as a node in its Belt and Road Initiative, it will not sacrifice its core economic security or global standing to support maximalist Iranian tactics. This episode carries profound broader implications for geopolitics in 2026. It demonstrates that in today's multipolar world, alliances are rarely based on unconditional loyalty. They are transactional arrangements driven by converging interests. Great powers like China pursue what they call win-win outcomes, but those outcomes are always defined by Beijing's own development goals and strategic autonomy. Energy security remains the ultimate currency of power. Nations that control chokepoints like Hormuz possess leverage, but overplaying that leverage often invites isolation and backlash. For the United States, China's stance provided valuable diplomatic space. The Trump administration leveraged the summit to secure public Chinese alignment not only on navigation freedom but also on the principle that Iran must never be allowed to develop nuclear weapons. While this does not signal full U.S.-China cooperation against Iran, it prevents Beijing from offering blanket diplomatic cover for Tehran's most dangerous moves. For Gulf states and global markets, the selective reopening offered cautious hope. Full restoration of normal traffic could ease price pressures and stabilize economies, though significant risks remain lingering mines, potential naval incidents, and the possibility of renewed Iranian retaliation. The human and economic costs of this crisis have been substantial. Higher energy prices have strained households from Europe to India, increased costs for food transportation, and slowed industrial activity. In Iran, ordinary citizens continue to face shortages, inflation, and economic hardship made worse by international isolation. Even in China, the ripple effects are felt through higher fuel costs and supply chain uncertainties, explaining Beijing's urgency to secure its own passage. Looking ahead, this Hormuz episode is likely to accelerate long-term strategic shifts. Countries are investing more heavily in alternative routes, such as expanded pipelines and overland rail corridors. China's continued development of railway links through Central Asia to Iran and beyond serves as insurance against future disruptions. Renewable energy adoption and strategic reserves are also gaining renewed attention worldwide. The lessons from this crisis are clear and sobering. Dramatic headlines about betrayal make for compelling narratives, but the reality is more nuanced. China did not abandon Iran entirely. Strategic ties, investments, and energy purchases continue. However, Beijing drew a firm line when its own vital interests were threatened. Iran has learned, perhaps painfully, that even its closest partners operate according to self-interest rather than ideological solidarity. In the ruthless arena of great power competition, loyalty is always conditional and economic survival usually comes first. As diplomatic efforts, military posturing, and back-channel negotiations continue, the situation in the Strait of Hormuz remains fluid. Full reopening may take weeks or months, depending on ceasefire progress and demining operations. What is certain is that the trust dynamics between Tehran and Beijing have been altered, perhaps permanently. Iran's leaders must now recalibrate their strategy, understanding that while China remains a critical partner, it will not hesitate to protect its own interests when push comes to shove. In the end, the events of May 2026 in the Strait of Hormuz serve as a masterclass in great power realism. Iran thought China was fully on its side. China reminded the world that, ultimately, it stands firmly on its own side, safeguarding its economy, its people, and its rise as a global superpower above all other considerations. The oil will eventually flow again, but the geopolitical calculations revealed in this crisis will shape international relations for years to come.